This podcast goes all over the world of current markets. Gold and silver's moonshot, what caused it, and the reason it can or cannot continue. The strange dislocation between gold and the digital gold, Bitcoin. Why is Bitcoin selling off? Inflation, and why my counterpart believes it's actually half of what's currently being reported. And lastly, stocks and the monumental week of earnings ahead. Michael Zuber, an incredible economist, and I discuss it all. Strap in. From Wall Street to managing hundreds of millions in client money, Nick and I use our alphabet soup of credentials to discuss the investing and tax strategies that actually work. Oh, and we played Division I college football together, so strap in. This one hits hard. Let's go. All right, Life Goal crew, we've got an honor today. The man, the myth, the legend, Michael Zuber on the line. Michael has been an awesome friend of mine. He invited me before I had any social media presence to come on to his YouTube channel and talk about the stock market, etc. He has an expertise in the real estate side of the business, but he is one of the best read economists that I've ever seen. He does daily shows on his YouTube. Get over there and check that out. But Michael and I just riff on what's going on in markets, what's going on from a policy standpoint, what's going on from a political standpoint. Today, we're going to cover all of that and then some. So strap in, right? So, yeah. Michael, thanks so much for the time today. You're the man. You're a pleasure to chat with. There's so much going on even just this week. S&P 500 earnings, you've got Fed decision, you've got ICE and whether they're going to fund it and that causing a government shutdown. What's got your attention this week? Let's talk.
Yeah, studying the economy for 30 years, there's always something going on, but some weeks are sneaky, and I think this week's going to be one of those, right? Like you said, we have a Fed meeting, which I think is going to be, frankly, this time a nothing burger, right? There's going to be no cut, no raise. I think, frankly, the Q&A session's going to be a drama series like Lisa Cook and Subpoena, and nothing that really moves the economy that the average American should care about. But the press is going to just lob hand grenade after hand grenade. It's not going to be helpful. Also, Powell's a short term, right? He's got 2 meetings after this one. It's far more important, in my opinion, who's coming next, which we can talk about. I think we have Sell America trade going on that's sneaky. I think we have, gold now being the largest reserve asset overtaking the dollar. I think we have Japanese yen carry trade, which is sneaky. We were talking about intervention. We obviously have this stuff going on in Minnesota. We have the larger issue, I think, of fraud. We do have likely a government shutdown now. And, and we got, oh, by the way, 20% of the S&P 500 reporting this week, with big tech names. So nothing is boring, all important. And frankly, I love what I do. I study the economy 90 minutes every morning, 7 days a week for 365 days. It's my puzzle to play with. And I enjoy this stuff.
I text Michael on Saturday sometimes. I'm like, happy Saturday, dude. He's like, day of the week doesn't matter to me, man.
Doesn't matter to me, man. It's all the same.
So as you can tell with that little memoir there, Michael is incredibly well read, incredibly tuned in. Hey, let's dive into one, just the top of mind one for me. Let's go at gold and silver. Yeah. What's going on, man? They are absolutely ripping. I'm happy to let you go, and then I'll kind of provide some context as to what we're seeing on our end. But, man, it has been a absolute moonshot for both of them.
Yeah, I think silver is probably the more interesting story. Gold, obviously, just now over 5,000 for the first time this morning, up $100. I think it's actually 5,100. But silver is up 10%, right? It cracked 100 on Friday. It's up to 110 today.
10% today. Let me be clear.
Today,
10% today.
Yeah, this morning, right? It's like this morning. So silver is interesting because, again, as somebody who's been doing this for decades, I remember reading about stories about the dirty Wall Street banks shorting silver, right? JP Morgan being the one that's often quoted. I have no idea if these are true, but I mean, these were things I was reading about in the 90s, right? So 30 years ago. And it was the big bad banks that were keeping silver down. And, it was $7 or $6 or whatever it was. And, it's not now. 30 years later, it's the time in the sun. And you have to ask yourself why. And I suspect it was the Sell America trade that broke first, right? And what does that mean? That just basically means foreign entities, basically saying we're gonna move 8%, 9%, 10% of our allocation that used to be USD somewhere else. And there's this desire for physical things that you can touch. So I think silver and gold, platinum, all those kind of right in there. And then where I think silver is going parabolic, China at the end of the year, like last couple of days of the year, said, hey, we're not going to allow exports of silver. So now you're going into a constrained supply. And, oh, by the way, silver has always been interesting because it's an industrial metal, what does that mean? It means it gets used in stuff we make. And we're making a lot of stuff that uses silver. Yeah. So again, it's wild. And this is the final thing. I think silver is so hot right now. This is a crazy thought, but I really do think it's going on. I think the crypto bros who are getting smashed with this crypto winter I'm out. I'm going to silver. So I actually think silver is the new Bitcoin. Now, it's like a meme stock. I don't think this will last long, like when you zoom out. But as we both know, the market can remain irrational a lot longer than you can remain liquid. So I don't think silver is something you short by any means. But, I can tell you this, I'm not adding silver coins to my, portfolio. And I've been buying silver for decades. Yeah. But it's fun to watch.
Let's add a little context to this because article over the weekend dropped and it said that silver is now twice as high as its 200-day moving average.
That's not normal.
That is not normal. That just talks about the parabolic nature of it. So let me take one step back too and just discuss on the Sell America trade, right? And give you what I think the catalyst is, and you can confirm or deny where this started. So in my eyes, where this Sell America trade started was actually much before all of our antics with Venezuela or Greenland, et cetera. It goes back to the Russia-Ukraine war. So when Russia invaded the Ukraine, what we did as a country is said, hey, all these Russian assets that sit in U.S. treasuries, dollar denominated, we are not going to allow them to access that. We are going to freeze those assets and not allow Russia to take money back out of our market. And so what every foreign entity and government in the world, every central bank said, hey, we can't trust them anymore. And so what they started to do was pare that trade down. And maybe they weren't selling outright treasuries, but they were saying, hey, this isn't a safe haven for us to sit our assets, because that was the number one safe haven was U.S. treasuries. And they started, let's start incrementally buying something else that we feel is safe. And that safety trade was gold. And gold and silver moved directionally together. Now, here's an interesting thing when it comes to the dichotomy of the difference between gold and silver. Gold is outright mined, right? So kind of when you think about, hey, what happens when gold prices go really, really high? Miners just start to increase the production of gold. Silver is not mined in the same way. Silver is a byproduct of mining other metals. So think about it like, this is overstating, but the silver is the luckiness of, hey, we're going to go out and go, mine for gold or copper, and we're going to get some silver along the way, but that's not our intention. Yep. So when silver goes parabolic, you can't just say, hey, let's increase production, flush supply into the market, and drive prices back down. That's not the way silver works, and that's why you have even more nuclear nature of a movement higher on silver than you do gold right now.
Oh, yeah, I think that's all true. I do think that was a red line that historians will look back on as a moment that caused countries and people to go, can we trust America?
Right.
I do think it's been exacerbated by what's going on in Japan with the yields. And then it's being further exacerbated by, Greenland and Venezuela. It's like it's a compounding effect. But you're absolutely right. The red line, the first red line that caused people to pause. And I think you're right. I don't think it outright caused selling, but it changed reallocations. And when you add that up over time, and then you add these accelerants, it goes parabolic like we're seeing. So I think you're
So you just talked about Japan, and Japan's in the news for nerds like you and I, but I don't think Japan is in the news for a retail investor really understanding or trying to understand how could Japan, the Japanese yen and the Japanese bond market, how does that put pressure on our stock market? Because I think there is pressure being created there. And if you remember back in August of 2024, everyone became an expert very quickly on this Japanese carry trade. So I can tee this up, or you can tee it up, and we can kind of walk through how this is playing out. I'll hand it to you and throw it right back if you want the simple ATM analogy that I utilized to explain the carry trade.
Well, I'll give you my shot, and I'd love to hear the ATM one. But basically, for the longest time, and we're talking decades, the well-heeled, the Wall Street money, has been able to borrow in Japanese yen at basically zero.
Yep.
And then throw it into the U.S. market at basically 5.
Yep.
And they were doing bonds, and they were doing ETFs and doing stocks, and it was, and then they're adding leverage, right? That worked. Yeah, that worked, and it worked really well. It was called the yen carry trade. It wasn't even that hard, right? You have to sprinkle in, currency risk and things of that nature, but it's not a hard trade to fathom when the delta is that large.
And let me just add a little bit of context. So when you think about the Japanese bond market, which sets interest rates, the Japanese bond market was at 0 and sometimes outright literally negative. So when you think about getting a mortgage, et cetera, a mortgage and any loan that you're taking is all based upon interest rates. So if you want to take a loan in the Japanese market, it was literally free, right? And so they're taking money out of an ATM for free with no fee, and then they're bringing it over to the United States, and they're either buying, kind of more safety of U.S. Treasuries, which is a relatively safe asset, or heck, our tech market has gone up nuclearly for 3 straight years at 25, 45, 35%. Let's just load the boat with that. But what's happened more recently, Michael, that's caused this to start to come under question?
Well, first and foremost, the Japanese yen has been going parabolic, much like gold and silver, right? It's gone from basically 0, I think, to almost 4%, which again, on a scale is crazy. It's like, 1,000,000% or whatever it is. It's just something astronomical. But really what's causing the yen carry trade to hurt is just the spread. The spread's collapsing. It's no longer 500 basis points. It's, 150 basis points. And the currency risk is still there. So again, as that gets skinnier and skinnier, the chance of using that free money goes out the window. Why should U.S. investors care? Just think about the fact that if Japan's not the house for all the liquidity anymore, and worse, it's now sucking liquidity.
That's the vacuum of now there's opportunity to buy something else instead of U.S. Treasuries. That's the real issue.
Or heaven forbid you get margined.
Yeah.
And you become a forced seller.
Yep.
Then you're selling treasuries and selling tech and you're selling ETFs.
Yep.
And if this thing breaks, and there's a lot of it's important to watch. I'm reading a lot more about it now than I was a year ago, and we're getting dangerously close. I've had people estimate if it got to 120 basis points, it would blow up. Some say 100. I don't know, but we're getting really, really close, and it's so important. I don't know if people caught this, but on Friday after hours, there was talk of the Treasury reaching out and asking questions of big banks about the yen carry trade. So again, not outright intervention, but they're certainly looking at it. It's got somebody's attention.
Knock. What's your exposure? Because we are concerned.
This could be, again, you want to talk black swan. This thing could be massive.
Yeah. And the crazy thing about it to me is that when this played out 18 months ago, where we came in Monday morning after a weekend and the yen popped really quickly and bond rates in Japan popped really quickly, which started to squeeze that profitability, it caused the market to open up. The S&P down 6% in one day. Now, it has just continued its lockstep march higher since then. So the problem continues to kind of exacerbate itself. Now, one thing I will say is markets aren't stupid. So they did get slapped in the absolute face in August of 2024 when the market snapped down. And so we started to realize, okay, this is something that we got to handle. But at the same time, the trade is still in place for a lot of folks, and it is starting to become more and more painful. Is there that point of cracking again like it did on that Monday morning when stocks gapped down? That's I
think it's even a little bit more, I don't know if you want to call it dire or risky. But as somebody who's been studying the markets for 30 years, it will just take one fund that gets out over its skis, that then becomes a forced seller, that then will reprice things, and the cascade will start. Right? This is not one of those times where everybody has to hurt. Like, there's probably a lot of wonderful operators out there, but if you got one nutbag who's gone out an extra 0 on the risk curve, and they get called, they'll be flushed, that will then reprice everything else. They'll get flushed, and you could just start a cascade, and Black Monday. I mean, it could get ugly.
Let's use that as a nice transition point over to the digital yellow gold or yellow metal. And let's talk about Bitcoin too, because Bitcoin has come under real pressure more recently, where it was at 6 months ago, it was at $125,000 a Bitcoin. I think it was almost Halloween when it hit a peak, a couple days before Halloween. And now you're in the mid to high 80s, right? So you've given a lot of back. And the real kind of concerning part, or not, I don't know about concerning, but confounding or confusing part of the whole thing is the fact that, wait, Bitcoin was supposed to be the digital gold, and you're getting a massive pump in gold, and you're getting a sell-off in Bitcoin. So I'll lob that to you. What the heck's going on here, and why are you getting this massive separation of those two trades?
So I think this is an important conversation because, again, you've been hearing for years, like I have, that Bitcoin was the answer to fiat currency, right? It was the answer to inflation. It was going to be the lifesaver. Like, I can't remember how many memes I've seen where it said Bitcoin fixes that.
Yeah.
And it's funny. I did a show yesterday with a Bitcoin, maxi, and I'm like, dude, you guys lost, right? You guys have been singing these songs forever, and they're all bullshit. You guys are just a NASDAQ stock that trades 24/7. That's all you are.
Inflation was one that was debunked in 2022.
Fiat currency didn't work. You're not a safe haven. You guys are just a bunch of NASDAQ stocks that trade 24/7. You're nothing else. You're just a bunch of hype and smoke. And, not to say that it's going to go to zero. I'm not saying that. There's plenty of people that will get it. But you guys got to come up with a new story, right? Inflation didn't work. Fiat currency collapse didn't work. The dollar's down at record levels, and Bitcoin fell 40%.
This is like politics. This is like politics. You got to reinvent the asset class again. Go where the puck is going. And now we've said these two or three things: inflation hedge, dollar hedge, all of those things, and it just hasn't worked. To your point, I've been pounding the table now for 3 years, and I'm not an expert on Bitcoin by any stretch. But when you look at the long-term nature of it, it is just simply that of take the NASDAQ or even the S&P to oversimplify, multiply it times 2, and that's the directional trade that's going to play out. But I will say this, that the S&P and the NASDAQ are basically flat from October until today, whereas Bitcoin is down 30% or whatever it is. Does that, in fact, become some sort of a warning on the market in your eyes? I guess what I'm getting at there is typically as you go further out the risk scale, usually it becomes more of a leading indicator. Now, I'm not positioning this to, hey, the stock's going to go to hell in a handbasket, the stock market, but I just wonder if you see anything in that vein of thought.
No, I think what's just going on, it's kind of like how we opened or in the beginning of the conversation. I just think there's a lot of money that normally would be allocated to Bitcoin that probably would have been a floor that is now going to gold and silver. It's kind of like the red line with Russia invading Ukraine. It's like when you cross that, the money gets reallocated. So I think all we're seeing, and you would know this better than me. I think the flows to Bitcoin got to be down 30%, and the flows to silver and gold are up 100%. Yeah, and you just watch the flows.
Well, I wonder kind of to your point of what's the next narrative, because the narrative was inflation, then it was anti-fiat, then it was ETFs coming to market, then it was, and forever it's been, we're going to actually use this currency to buy and sell something at some point, then stable coins enter and are a better proxy for that. What is that next catalyst to move it higher? That's my big question. That's why I think it's selling off or it's continued its downward pressure, is just I can't come up with that next, this is what Bitcoin is now.
Yeah, again, as an asset class, you and I have talked privately about this. I put 1% of my net worth into Bitcoin, specifically Bitcoin and Ethereum in 2018. Why did I do that? Well, frankly, I was already retired. I was already financially free, and I saw it as my insurance policy. Yep. Right? And I've not added to nor sold anything since 2018, and nor will I, right? It's just I have what I have because it's an insurance policy. That's frankly, that's the only one that I haven't heard people talk about, is because, again, if you believe the story, right, Bitcoin has a limited supply. I think it's 21 million or whatever it is. There's a whole bunch of people that are richer than I am that have zero exposure. Yep. I do think there's some legitimacy to putting 1% to 2% of your assets into something as kind of a moonshot or protection. That's the one that I've not heard them talk a lot about that I actually think has that Wall Street could push.
Just the slow term, cyclical, this is an insurance policy, et cetera. Yeah. I get it. But that still doesn't solve for the price pressure that it's experiencing right now.
No, because it's a slow build. No,
that's my point. Yeah.
No, Bitcoin's in winter, and it's again, if you're a Bitcoin fan, you got to be feeling like you got a gut punch.
Yeah.
Right. It wasn't the inflation answer, and now it's not the fiat answer. I mean, Peter Schiff looks like a genius, right? If you zoom out, maybe not, but if you zoom in, Peter Schiff is kicking the shit out of Bitcoin.
Yeah.
And good for him.
All right, let's work over to inflation, because we talked about it a bunch now, and we talked about the fact that Bitcoin is or is not an inflation hedge, et cetera. So we have inflation that seems to be, it had been moving higher slowly, and now it seemed to moderate some. So you've got CPI and core CPI when you strip out food and energy, both at basically 2.6, 2.7, right? So what are your thoughts on inflation, broadly speaking? And then we can talk about, hey, the Fed and where things are going policy-wise.
I think if you're honest with yourself, inflation's more like 1.5% today.
Is that on your owner's equivalent rent thought?
Exactly. So again, if you guys don't know, the shelter cost or owner's equivalent rent inside CPI makes up 32%. Yep. So it's the biggest single component.
And let me draw a pause just on you there, because this is Michael's area of expertise, to be clear. The real estate side of things is what I look to him for, and so he's going to speak from a very educated lens on this. This isn't him winging it.
No, this is something I've been doing for a long time. So again, when you look at owner's equivalent winter shelter inside CPI, again 32%. So if it's wrong, it's really meaningful. So what do I mean by that? So owner's equivalent rent is basically a survey where they go out and ask people, and this
is bananas to start.
It's banana. It's like, hello, welcome to the .com era, let alone AI, right? It's just complete nonsense that it's done this way. And just to show you how wrong it is, the last time I reported it was 3.2%. Which again, if you're not in real estate, you're probably like, oh, that's probably okay.
Yeah, okay.
It's complete nonsense. The actual across the board, single family home and apartments across the country is actually -1%. -1.
Talk me through that.
So if you do the math, right? And again, you can get this from Trueflation. You can get this from CoStar. They're like up-to-date rent information is it's like one Google search away.
So in effect, what you're saying here, and then I'll let you expand upon it further, but rents year over year, month over month, I'm not sure which one you're measuring them, but they are slightly lower, I think it's year over year, than they were.
Slightly lower. They're deflationary.
What, right? No, right? No. I know. I'm not saying slightly lower than they were being reported. I'm saying if you take your rent this year and you take the broad national average, it is just modestly lower than it would have been a year ago today, but it's being reported as 3.2% higher.
3.2%. So the delta is 4.2%.
Yikes.
So all you have to do is take a third of that delta, which again, off the top of my head, call it 1.4%.
Yep.
Take 1.4%, subtract it from the reported 2.6, and you get 1.2%. So I actually think inflation today is running very close to 1.5.
Okay.
And the Fed should declare victory, and they are once again late, and they're like really late. So I think, I think the Fed can declare victory. I think we're under 2.
So with that mentality, what would you tell the Fed to do? Not tomorrow, but Wednesday. I guess when people are hearing this, it will be today, which is Wednesday.
Right. So that's it. So just because inflation is under 2%, I'm not saying cut. A lot of people would.
Okay.
I don't know that cutting right now would be the right answer. Because again, you still have an economy that, just posted a revised GDP at 4.4, up from 4.3. I think there's a very good chance that we could be over 5% in Q4 and potentially 6% in Q1. A lot of that is because of imports collapsing, right? Because again, imports subtract from GDP.
Another kind of wonkiness of how we report.
Yeah, it's weird, right?
Bananas. Yeah.
Yeah. So again, it's really interesting. So I actually think we're a lot closer to neutral, or what the Fed would call R-star, right? Maybe we're a quarter to a half from neutral. I certainly don't believe like Fed President Moran's like we got to go to 1%, right? I'm in the camp of we just need time to get through, creating $8 trillion in money supply, right? If you look at the M2 money supply, it just went parabolic. And, if you zoom out, you just need time for the curve to catch up. So, I think the economy is running okay now, right? We got an unemployment rate below 5. I think it was 4.6 or 4.5 the last time it was reported. So I'm not in a rush to cut. I'm certainly not there, which probably shocks a lot of real estate people. But I want to see the average American, right? This K-shaped economy is crushing people. And we just need time for that curve to catch up. And unfortunately, it's probably years for this thing to catch up.
You just hit us at a perfect inflection point or transition point from, okay, we understand kind of the Fed's got this movement to make. By the way, this week there's a 2% chance
it's not happening. No cut.
That they're going to cut. Right. So that's not happening. We are going to get a little look at kind of potentially, you said throwing grenades at Jerome Powell, but just thoughts on him transitioning, et cetera. Like, he's going to be peppered with those questions starting at this presser. So does he step down from the Fed in general, or does he maintain
That's
a board
great
seat?
Question.
Yeah.
Because
that'll be
again,
interesting to see play out.
I mean, let's just gamify this, right? So again, everybody knows the big job, the president, is up in May. But he could stay for another 2 years as a Fed president.
Could you imagine going from the maestro and making all the decisions? Because, like, at the end of the day, everybody has votes, right? Mm-hmm. But it really does seem like, and maybe you feel differently about this, it really does seem like the Fed chair is the one that says go or no go. Are you feeling differently about that?
No, I agree. I think since Greenspan, right, and when Greenspan was president, most of them were unanimous. I think he led the way, and then Bernanke and Yellen. I think the Fed president's vote's not one. It probably counts like for 6.
Yeah.
Right. So he alone or she alone can't move the Fed. I get it, but his vote ain't one. It's something bigger, 4 to 6.
But it will become Jerome Powell's will become one if
Yeah.
he steps back and maintains a board seat.
Yeah. So again, let's just play with this. So again, he's obviously in a very contentious relationship with President Trump.
You
obviously. Sure? Yeah. I'm reading between the lines. And by the way, on the other side, he's already rich. He's already richy rich. And, he's old, right? He could go on book tours and speaking engagements and enjoy his life. But I don't know. I mean, if it were me, I'll just be honest. I would be so ticked off. I would keep my seat just to stick the middle finger. I absolutely would. Right? That's just who I am. You want to try to punk me? I'll show you.
Let's go.
But yeah, I would fight like that. I'm just being honest. But I think most people will, and I think Powell will exit, and he'll take the $1 million book tour and and then by the way, he'll be able to throw a lot more hand grenades, because that's the other thing, and that's why I think Rick Rieder's coming in behind him. I think you can do a lot more talking when you're not on the Fed. Like, the Fed today is in a blackout period; they can't talk. But if he's just Jerome Powell, American citizen, he can go on every news network he wants, and every day he could throw hand grenades at Trump if he wanted. Yeah. So I think that's probably what he'll do. I think he'll leave, because I can't imagine sticking around. It's
interesting, Rick Rieder, just because Rick Rieder comes from the industry that I used to work in. I used to work at the big money managers, where they are the folks that are building out the ETFs that you're buying in the end public, or the mutual funds or the hedge funds, whatever. And so I just come from the same mind of that. That's where I was brought up. That's how I was taught from an institutional lens standpoint. So I love the thought of bringing an executive from a money manager in to run the Fed, because maybe this is, biased to my own personal upbringing, but I think they really get economic policy and what drives things. I mean, Jeff Gundlach is another big favorite of,
sure.
I don't think he's in line at all for the Fed, but he's just a big mouthpiece in the market. And he's the one that says, listen, the Fed doesn't set interest rates. The Fed follows the 2-year bond market. And so wherever the 2-year bond yield goes, the Fed just follows in lockstep. So it's interesting, but we'll see how it all plays out. But I do want to use
So I think Rick Rieder's the answer. And why do I think that? Not only everything you just said is true. He's the number one bond guy according to lots of people. So he's got the chops. We have a debt problem. So he's obviously well qualified. I think the reason he's going to get it is he's a complete outsider.
Yeah,
that's why he's going to get it. Because I think if you read between the lines, Bessent, Trump, lots of people want the Fed to fundamentally act different. And you can't do that by bringing on somebody who's been on the Fed or is in and around the Fed today. You got to be an outsider. If you want to make change, you got to bring in an outsider. And I think Rick's going to be the answer.
And that was Trump's whole election. Trump himself getting elected, right?
Yeah.
So I do think one of the interesting points, and listen, this is not a political show. This is not a social show. This is not anything. But we are seeing real social unrest play out right now. And you just mentioned the K-shaped economy. And regardless of whether it's politics that someone disagrees with or gun rights that someone disagrees with or whatever, I think it always comes back to the following thought. It's the economy, stupid. which is I think what drives everything. It drives what political aisle that you sit in, and what we're seeing is just the continued further separation between the rich and the not rich. And it's getting worse and worse and worse. And I think that we're now getting this, now it's bleeding directly back into politics, where they're now going to either fund ICE or not fund ICE as part of this most recent bill, and that's going to cause a potential government shutdown. So that vote is coming up on Friday. Mm-hmm. So just, I want to know whether you agree with that or not, because that's a pretty far-reaching statement to say that the economy is what's driving social unrest. Do you agree?
So I'm actually going to disagree, and we don't disagree very often. But
I like it better when we do, because you bring up better points and sometimes you can convince me.
It's more fun. So again, I do think the economy is important, but I think what we're witnessing right now, especially with Minnesota being the clearest example of this, is we're seeing what this is what I think. I think most Americans are rational and in the middle. And by most, I think it's like 92% of us. But I think there's 4% on the far left, and there's 4% on the far right, where they're just lunatics, equally clowns, and believe the other side is evil, right? They're toxic. Unfortunately, about those 4% on each side is they're extremely loud, and they're on social media, and they're just consistent, and they're frankly organized, right? If you've seen some of these Signal chat things, they're
incredibly well organized, impressively organized.
Yeah, exactly. These are not just random protests. These are organized. They're damn near military operations.
Yep.
So that's what I think is going on. Is I think you've got 4% of the world that are in such echo chambers that you just talk about the orange guy and you either hate him or love him, and that's not how the world works. So that's what I think is going on, and I think social media is to blame for all of this. I think once you get inside those,
I agree.
Yeah, once you get inside these algorithms. And again, I sold machine learning. I sold AI for a decade. These algorithms are very good and getting better. And they're just going to keep feeding you what you look at. So what I've told my audience to do, because again, I can see it on my own feeds, is if you want to reset, go to the search bar of any of them, Facebook, IG, YouTube, whatever, and do the following. And I strongly suggest this for most people.
You're about to educate me because I have no idea where you're going with this.
Go to your search bar, and I want you to type in rainbows. And then I want you to like and comment on rainbow pictures. Then I want you to go back to the search bar and type in puppies and do the same thing. You can fundamentally change your screen, your wall, in like 20 minutes.
Yeah.
And trust me, looking at rainbows and puppies is a lot better than all this political nonsense out in the world. It just is. Just reset this stuff. Right? Yeah. The echo chambers is what's causing America to seemingly tear at itself. And again, I believe we're mainly in the middle. I believe most people think killing people is bad. I think most people believe fraud is bad. I think government waste and abuse is bad. I think 92% of us can agree. And the other 8% of us are just lunatics who are, probably shouldn't go out in public.
I completely agree with you. I think, and I thought you were going a different place with the social media aspect of it, because I think what's going on also is that every day someone logs into social media and they see whomever in a Ferrari, in a Lamborghini, in a this, in a that. They think that that is now normal life, or not even that it's normal life, just the envy or the jealousy starts to kick in, and that self-metastasizes into some of the behaviors that we start to see with, again, that K-shaped economy of the folks that are rich getting really rich, and asset prices continuing to make them more rich, and the other side continuing to kind of die on the vine and dwindle.
Yeah. So again, I don't know that I agree with that. I think you're onto something, but you've got to add generations. Like when you think of boomers, X, Gen Z, and whatever the Gen Alpha, whatever the ones are, there's not a lot of boomers and Gen Xers like me that we don't fall for that, right? We've got decades of experience and we know most of these people are renting Ferraris and they're frauds.
That's wisdom. That's
wisdom, babe. That's well-earned wisdom. I got scars, baby.
You got the salt in there. That salt is wisdom.
That's right. I got scars from believing that shit 20 years ago.
Over here on the side.
Yeah, that's called kids.
Yeah, exactly. Exactly right.
So I think what you're seeing is just the younger generations, they fall for that. And again, I think that's why crypto was winning, because they believe the hype and the frog coin and the emu or whatever these freaking altcoins were.
Yep.
And they lost the story.
Yep.
So I don't think that's about the K-shaped economy. Because again, if you look at the top 20%, again, the top of the K, and you look at Gen X and boomers, I bet you most of those folks, they don't give a rat's ass about what's on IG or any of that stuff. It's the people that are coming up.
Yeah.
And it's very unfortunate. Because again, the other thing that I think is really interesting is, and this is probably controversial, but I believe it with every fiber of my body, it has never been easier today to get rich. The amount of reach and the amount of ways that you can monetize your particular uniqueness and passion, it's never been easier. When I was coming up in this game, I had to physically drive and go to locations and do all these things. Today, you just flip on and there's hundreds of Eventbrites and other social groups and all these things. It's never been easier. Then you add in AI, right? I think it's never been easier. Then the last thing I'll say on this is something that I hope happens over the next decades is we see 30% of universities and colleges close. I think the fact that the government got involved, it's a scam at some level. And, I think most people would be better off not going to college and maybe doing the trades or something else.
It's interesting. I'm on the college that I'm at. I'm on the board of, and they just bought another college that was in the same geographic area. Iona University is where I go, and Iona has done incredibly well from an enrollment standpoint, but most of the competition in the New York metro area is really dying on the vine, and they were able to purchase another university, right? And so no, I don't disagree. I think that we need to be much more intentional with what we're teaching at college, what the useful nature of that is.
We need to talk about money. Just simple money.
Call it spade a spade. We need to talk about money. And it needs to start before that. It needs to start in high schools as well, which I think there's now 11 or so states, 11, 14, something like that, states that are now mandated in their curriculum. But it's bananas to me that it's not all 50, because it is what drives the world. Let's call a spade a spade.
Yeah, and again, I do want people to realize, I really do believe that. It's never been easier to get rich or wealthy today. You have the amount of access. The other thing I'll say about this is this is something I'd actually bet money on. In the next decade, we will see a company be worth $1 billion that is a solo operator.
Is that solo operator named Mr. Beast?
Yeah, well, I don't think Mr. Beast. In fairness, I don't think he's a solo operator.
He's got an army. He's got an army.
Right.
So, I guess if you were saying like literal solo operator,
literally a single person, right?
Yeah.
They will create some AI or collection of AI widgets, and they'll be worth $1 billion. I think that's what's coming, right? The time of the IBMs of the world, where there are hundreds of thousands of employees, that's over. I think you're going to see lots of 1 to 10 people companies change the world.
I mean, this might be an R-rated example of that, but OnlyFans. You look at OnlyFans, you look at the revenue per
employee. It's bananas.
It is.
Nobody touches them.
It laughs at NVIDIA, right?
It does laugh at NVIDIA. It laps them in like 4 circles.
Yikes. So, all right, I guess as we kind of round things out here a little bit, I'll just bring up one more quick topic that we could touch on, and then we'll let you get out of here. And we appreciate so much your time. So, we have earnings this week. So, on Wednesday specifically, we have Microsoft, Meta, and Tesla, and then on Thursday we have Apple. Right, so there is 4 of your Magnificent 7, or I'm not sure if Tesla. No, it's not, but whatever. There's 3 of your Magnificent 7, and then attach Tesla on there because it's a biggie as well. What are you looking at? What are you watching to see out of these earnings reports?
Well, I think what the market is watching for. So I'll answer it two ways. I think the market is basically saying, are you guys still spending?
AI spend.
Right. Yeah. AI spend, data center, what's going on? Because again, there's that feedback loop. And again, this is one of those momentum plays. It's not going to take all four. It'll just take one of them to whack capital investment, and you're going to feel that on the chin.
Yeah.
So I think that's what the market's looking at. What I'm looking at for Tesla, what I'm looking at for Tesla is, just what's going on with EV, right? We saw GM shut down their line. The rebate is gone. Is the stink of Elon being a Republican off the brand? Because there was a time where Democrats wouldn't touch it. They were vandalizing cars.
I think he is doing a good job there.
I think so.
I think he's just completely stayed out of that realm and focused on bringing up, the new innovative thing over here. Like, look at my right hand, not my left hand. Forget what I did 6 months ago.
Yeah, no, I think, again, but we'll see that with unit sales. The other thing I think you're going to get from Tesla is it's like Optimus. And again, as somebody who lives in the real world, who's an accountant, like today, Tesla is a car company, right? Yeah. Talk about units. And maybe you could talk about batteries because they have an impressive battery arm. But if the conference call is 80% Optimus, that's going to be a red flag to me, right? Because Optimus is years away, at least at scale.
It's going to be that, and it's going to be robotaxi. And here are the cities that we plan on rolling it out in this year. That's where it's going to be.
Yeah, and again, at some point, this future talk is people are going to catch on to that, and when it does, it could be painful.
I think the big interesting one is the fact that folks either prepping or thinking about, hey, we might be able to get Elon Musk in a different form in the market at some point this year, which is SpaceX. So if SpaceX comes public, now that whole fanboy and gal group that love Elon, maybe they then transition some. And you think about this, like Tesla, he owns 12 to 13% of Tesla. He owns 40% of SpaceX.
Yeah.
So where's
his attention going to go? Exactly.
Yeah.
I think SpaceX. I mean, I don't know I think it'll be the largest IPO ever.
Yeah. Yeah.
I do.
I'm excited for earnings this week because I want analysts, which this is not in their own self-interest to be clear, but I want someone to come on and say, all right, talk to me about profitability and how far out profitability is on this AI spend. But again, analysts typically want the stock going higher, so they're not going to ask that.
They're not going to do that. But so it's funny because this, but for the audience, every quarter when earnings come out, the big banks start. And I don't know if you picked up on this, but the big banks were not shining stars this time.
Yeah.
The last 2 or 3 quarters, they were A+ across the board.
Yep.
This one was like there were maybe JP Morgan was an A, but everybody else was like B-. Yep. And I'm wondering if that's going to show cracks through the rest of earnings. Because the other thing about Wall Street today is you all have never been more optimistic. You guys are like priced for perfection.
Totally.
And, I've been around the block a long time. And when things are priced for perfection, perfection doesn't show up.
No one coming into this year could come up with a negative side of the market, right? And
that's not okay.
The expectations for the Mag 7 are to grow roughly 21% their earnings this year. The remaining 493 is about 5%. The blended is about 14%. Those are typically, to be clear, the numbers more like 6, 7. 6, 7, my kids, oh my God. 6, By the way, it's now transitioned from my kids to my father, which is ridiculous.
Your father's dropping 6, 7 now.
He thinks it's the funniest thing on the planet because he now thinks he's cool because he did on it when he's like a year and a half behind. But that's 6, 7 is the typical earnings growth for the S&P throughout a normalized calendar year, and so now we're looking at a double of that is the expectation. Yeah. So,
yeah, it's I don't know. This quarter does not feel. I don't think earnings are going to be that great. I think anytime you come into a year when everybody's bullish, it's kind of a wake-up call. And again, if you look at the charts, it's like, guys, the earnings don't go that way forever. You guys zoom out, right? This is not normal.
Redwoods are tall, but they don't grow to the sky.
They don't grow to the sky, exactly. Yeah, so call me a doomer on this one. I don't think this quarter will be as robust as the last quarters. And again, it won't be horrible. But
Michael, you're so impressive in your ability to talk about so many different facets, and that's just, the economist that you are and the amount of time and energy you put into it. Everyone get over, follow Michael on YouTube at One Rental at a Time. He's also on Instagram. Anywhere else, Michael? Everywhere?
Nope, that works everywhere.
One Rental at a Time. And he puts out consistent daily content that's not junk, not garbage, not fluff. It's right data-centered and well-read. So thank you so much. We'll do this again if you'll take us up on it here
Anytime.
in another quarter or 6 months.
Thanks, bud.
Talk soon, my man. Quick ask. If you're enjoying the show, hit the follow and drop a rating. It helps more folks find our podcast. Thanks so much.
The information discussed in this video is for educational purposes only and should not be considered investment, tax, or financial advice. Investing involves risk, including possible loss of principal. Always consult a qualified financial professional before making any investment decisions. Past performance is not indicative of future results.